owner or a freelancer who when looks at his or her bank statement is completely confused because you don't know what's going for your business, खुद का personal क्या है, and if at all any investments is happening, where are they going? Full confusion. If that is the case, then do watch this video till the end because I will help you to organize it. Hi there, Namaste. This is Akriti Agarwal Iyer and welcome to our next video of the series, Are You a Money Virgin? This video is specially designed for freelancers and business owners. Firstly, I want to tell you all that let's stop calling yourselves freelancers. You're working really hard to set up and expand your business, then might as well call yourselves a business owner and an entrepreneur. So this video is how should you manage your cash flows. Generally, what happens is, when you start a business, your focus is so much on the product and marketing that finance takes a back seat. And that is why we generally start with our usual one bank account from which we are making all the payments, receiving our client money. And if at all there is that one FD or mutual fund that we've been doing, we do that. Basically, when we sit at the end of the year, there's a complete khichdi. पता ही नहीं कौन सा पैसा कहाँ से आया और कौन सा पैसा कहाँ जा रहा है. If that is the case, then you need to follow the bucketing approach. In the bucketing approach, you create different buckets for different functions. So here, your bank accounts will work as your buckets. So to do this, you don't need one, not two, but 3 bank accounts. Yes, a bank account for each and every function. So you would have one bank account which will be a business account, generally a current account. Second would be a personal account, a savings account. And third, and the most important account in fact, is your investment account. Because from these you will make all the investments. So when you start a business, you should have a current account which will be your business account and all your client payments, anything that you sell, any income that you generate from your business will flow into this bank account, and all your business expenses like your vendor payments, your electricity bills, your employee salaries, even your taxation would be made from this bank account. Your second bank account is your personal bank account. This is for your own expenses like your ghar ka electricity bill, your house rent, your trip to Ladakh. Everything will be paid from the personal bank account. And the third bank account is your investment account from where you'll make investments. So any surplus that you have, you will transfer it to your investment account. And from here, you will make all your investments such as fixed deposits, mutual funds, any insurance policies, even your trading and demat account would be linked to this bank account. Now, how would this practically work? Let's run through an example. Suppose you are running a consulting firm and you receive a fees of 1 lakh rupees from a particular client. Now you know that your business's regular expenses are around 25,000 rupees. So you keep so much in your current account and you transfer the balance to your personal account. Now you're again aware that your mahine ka kharcha is around 20,000 rupees, which includes your rent, your food, your conveyance, everything which is your regular daily need should be taken care of from your personal account. Now you're still left with 55,000 rupees. That you will transfer to your investment account because it is your surplus. And then from your investment account, you will make investments. This will ensure that there is proper segregation of money and eventually whatever is your surplus that is getting invested and converting into a larger portfolio for yourself. Many people ask us as to why do you have 3 different bank accounts and why should we do this segregation? Well, the reason is simple. Unless and until you don't see your money leave your bank account, you will always have the temptation to spend it. Now, once it is in your investment account, you cannot touch it longer, but you have to only invest that money. And this process is known as mental accounting. So we are trying to convince ourselves that that money is not there for us to spend, but we have to invest it. Whether you invest it for your business or personal reasons, that's separate, but that money is going into some sort of investment. Another reason is that in future you change your source of income, say your business expands, you register your company in different formats, and you need to change your income account, your investment account and your personal account remains standard. So this is a planning we are doing not for the next 1 or 2 years, but for the next 20 and 30 years. Because whenever your investments will mature, the money will flow back into your investment bank account. So that will always be constant. And a separate personal account ensures that you know what's the difference between your business expenses and personal expenses. This will help you a lot when you're filing your tax returns, because your business expenses are the ones you can claim a benefit of. I'll do a separate video on that, but for today, just know that have 3 bank accounts. Now, while I'm talking to you guys about having different bank accounts, let me just guide you on how should these bank accounts be. First of all, open your bank account in a private or a nationalized bank only. Do not go for a cooperative bank. How much ever interest they are giving you, cooperative banks are a big no. Thirdly, go for a bank which has a good net banking services and has a good app. Because trust me guys, you are not going to go to the bank branch to deposit checks. We want everything which happens on our phone, max to max on our desktop. And last thing, you cannot open 2 savings accounts with the same branch of the same bank. In fact, it's a good idea to have your personal account and investment account in 2 separate banks so that you can enjoy their exclusive features. I think this will give you a good head start on which banks you should refer to when you're opening your 3 different bank accounts. Well, I'm not done yet. I have just one last advice for all you business owners. The COVID-19 has taught us that nothing is predictable, but we have to be ready for everything that comes our way, at least financially. So yes, have your emergency fund. But for you business owners, you don't need 1, but 2 emergency funds. 1 for your business. So identify your business expenses, and 3 to 6 times of that should be put aside as a business emergency fund. And separately, you have khud ka khana pina also to take care of, na? So uska also you need a separate emergency fund. Do set these up as an add-on thing to your 3 bank accounts. I hope you enjoyed this video and had a lot to take in and work on. We will make more such videos for you business owners where you can understand how to manage your cash flows, investments. If you want to learn more about investments, then you can check out our course, Be a Feminist. Details of the same are there in the description below. And while you're trying to count how many bank accounts you have, why don't you just do 3 things? Like, share and subscribe to our channel. Watch out this space every Wednesday and Saturday for freshly brewed content from Wealth Cafe. Until then, have a good day. Happy investing.